Hi guys, welcome back to my channel. Kelvin here. For this episode, we have none other than Alvin, or better known as Dr. Wealth.
Hi. Thanks for having me in your show.
Can I call you Dr. Alvin?
No, but I'm not a doctor, you see. I don't have a PhD, I'm not a medical doctor, so no, it's just a name.
Okay, Dr. Alvin. So what should the viewers know about you?
I guess if you have like looking for courses regarding investment topics, you might have heard of us. If not, then we are a financial education company. So we run a lot of courses, and we also do a lot of education content, just like what Kelvin does, right? So we do a lot of videos. We have more articles, more written stuff. That's always been our core. But we also venture into videos and Instagram as well.
Yeah,
so
do check out his YouTube.
Thank you. Okay. So hopefully we can be of value to the community. I think that's more important. Everybody learn something and improve their investments.
Right. So let's talk about the main topic of today. How's your portfolio doing right now?
Very bad. Markets are down, and there are very few places to hide, right? Whether is it talk about crypto, you talk about tech stocks, you talk about China stocks, even you talk about REITs. There's even bonds. Okay, there's really no way to hide unless you are really stuffing your cash in a biscuit tin or bank account. Then maybe that's the only safe place, I would say.
Those people who don't invest are up.
Yeah, exactly. They're actually beating all the investors out there.
So actually, how does your portfolio look like?
Okay, there are a few structures. Okay, so maybe let me explain, and I can disclose a bit more in this video, right? And so, first of all, the portfolio is structured into called barbell kind of positioning.
Right.
So 90% of the investments are into those that are more long term. Then the 10%, it's not that they are not long term, it's just that they are more speculative in nature.
YOLO.
Inclusive of cryptos. So I park it under there. Yeah. So which means that I'm prepared to lose, but if right, it can make a lot of money. But at the same time, I don't risk so much. So that's why I carve out that 10% into that portfolio. So that's the speculative, you can say play money, right? So 90% of the investments are more for long term. And within that, there's also using different strategies. One is a growth strategy, one is a value strategy, and then the third one is a momentum strategy. So currently, it's more focused on the growth part, and that's where about, I guess, 70% are in growth. Momentum right now, there isn't much unless it's going down. But I don't really short, so there's no position on that. Then value also over the years have shrunk a bit, as the growth opportunity are a lot more, especially when the markets are going down.
Right.
Yeah, so I would say mostly growth.
So how many percent is in China stocks?
More than half, I would say. Yeah, more than half, right? Because it used to be even higher, but because China went down, so I would expect the percentage of the weightage have gone down as well.
Right.
Yeah.
Then the rest are in like US, split among US and Singapore. Right? Quick pause. We are now in November, and you know what that means? Even more sign-up bonus from Webull. Webull has further increased their sign-up bonus to $150 cash voucher. All you need to do is deposit at least 2,000 SGD into Webull, buy a US stock or an US ETF with a minimum transaction of at least $100. Then buy one option on the US market while maintaining a 2,000 SGD net account value for that 30 days, and you will receive all your free rewards. So if you are interested, you can sign up with my link down below. With that being said, let's get back to the video. My next question is recently that China whole crash thing.
Yep.
Right. So with fears that the China government could do even more stuff to the companies, right? Why would China stocks have a chance to even go back out?
I guess it's long-term view, and long-term means many years, right? So I also don't expect the China market to rebound. Even if rebound, maybe it's more like a dead cat bounce kind of thing, right? As we have seen in the last few days. I guess a lot of fear around China is regarding a political risk, correct? Because people basically don't trust what the CCP is going to do, especially with presidency going for the third term and have absolute power over that. So I guess it comes with ideology and belief, because certain people believe in more democratic kind of society,
Right.
kind of setup, capitalism, freedom of speech, right? So if you have that kind of belief and values, right, it is very likely you hate China. It's very obvious. Okay, so China has a kind of a love and hate relationship. Some
Right.
investors like, some investors don't like. And I think it is fine because we all have different values and beliefs and all this. So for me, I am still okay with it because I look at the more in the next few decades kind of time frame, kind of horizon. And I believe China will outlast Xi Jinping. Right? Even you don't like him, eventually he'll be replaced. Right? Maybe you don't agree, maybe you think that, oh, you go for a fourth term. We don't know. Okay, there is risk, of course, with investments. There's always this uncertainty that's going on. But coming from the point of view of like, look at those growth stocks now. Okay, and I know when I talk about growth stocks, a lot of people would link to tech stocks. Okay, a lot of people will compare the Microsoft, the Apple with Alibaba and Tencent. They will say, US one better, why you want to buy China one, right? But to me, I'm not so. To me, growth is much more than tech.
Okay.
Okay, and I was looking at I have this concept called the Lindy stocks. Okay, but it will take a lot to explain. So, in short, it means that this kind of products or services, right, have lasted over a long time and will continue to be relevant in the future. Right? And for example, it's like what Warren Buffett always says, like Coca-Cola, right? And his whole until today. Okay, it's like, you know that Coca-Cola has been around for like probably 100 years.
Yeah.
And it's very likely that it will continue in the next, 20, 30 at least years. So I like this kind of durability of product and services. And there are companies in China that have exhibit this kind of characteristics. Now, one is the soy sauce, which is Haitian. So you know that Chinese cannot live without soy sauce, right? So it's relevant for a long time and it's relevant in the future. And the growth rate relatively is still high, 10%. Don't discount this year, right? 10% per year for a product that is very lasting, okay? And as in you will keep buying, not that the soy sauce lasts a long time, okay? and the growth rate is still much higher than what you can get in US. So relatively, when you look across those kind of category of stocks, okay, then you realize that actually China does give you a better growth prospect in that aspect. So that is how I made that decision. But it's not that I'm pro China.
So it must so it must be very long term kind of view.
Yeah. And they are another concept is that they are dividend growers. That means every year they raise a dividend, so you have the compounding effect as well. So you get both capital gain and the dividend gain.
So my concern with that is like, what if the political risk still stays there even after multiple decades?
Yep.
Right.
Possible is possible, right? So I would say that if the political risk will never go away, I think it will never go away. Okay. The reason I say that is because the West and the East culturally are very different, right? And if we always use a Western lens to look at China, right, the political risk always exists. Yeah, but maybe if you ask a China native, I have been living like that. it's always authoritarian since I don't know what dynasty before, right? There's always in Chinese what they call it, 一人之上万人之下. It's always that kind of culture. It's always authoritarian. Democracy is a very Western culture. So I think this political risk from a Western point of view will never go away. And I guess you're right, 20, 30 years later. But what I would say is that it doesn't mean that an authoritarian government will not do well for the economy. Okay.
From Singapore's example.
I won't say Singapore. That's very political. How can you say that in our video? I mean, even from China perspective, right, the 20, 30 years of growth was there.
Right.
So I guess maybe we discuss from an investment merit point of view, but I do think that some people have political concerns, and I think China is not for everybody.
Okay.
You must have enough faith and belief, just like any investment they do. Right? Some people believe a lot in crypto. 100% in crypto is fine, but to me, I cannot. Right?
I also cannot.
So some people see me, wow, you've put so much in China, I cannot. Right? I think it's fine. I guess at the end of the day is where you find that comfort, where you find that confidence, and there's no right or wrong.
Now that the market seems to have bottom, where do you think the market bottom is?
I thought you were telling me that the market has bottomed.
No, because it was like bouncing back up from its this year's low, right?
Okay.
Do you feel
You are
that?
referring to S&P 500?
Yeah, S&P 500.
Okay.
Not Alibaba. Or S&P 500.
Yeah.
Do you think that we might have seen the bottom already?
I really don't know where the bottom is, to be honest.
Okay, so let me put out like there's this actually two camps on YouTube lah.
Yeah.
One believes that there's earnings recession and quantitative tightening, which can cause the market to go further down lah. And all the recession that's going on.
Yeah.
So by 2023, the market could be lower from current point. Then the other point of view is that inflation may have peaked.
Yeah.
Most of the company actually beat earnings. So and the interest rate may be slowing down already.
Yeah.
So there are these two camps.
Yeah.
So which camp are you on?
I would say is more on the positive
Right.
camp, right? So I agree with some of the viewpoints. I think inflation has peaked, and you can see it steadily coming down. But the target is at 2%. We're still at 8+. Still a lot of room to go. And I think the interest rate hike will continue. But there's a possibility that they may slow down because they have been accelerating it, and nobody knows what's the consequences because there's always a delay impact that's coming in. But I think generally on the interest rate side is slightly more positive than negative going forward.
Okay.
Then on the economy side, I think recession is just a matter of time.
Right.
Because a few indicators, right? You start to see even the big tech, their revenue, their earnings report is really very slow, right? Don't talk about Meta lah, but even you look at Google or Alphabet or Microsoft, right? You see a single-digit revenue growth, and they've been declining. Their growth rate has been declining for the past 4 quarters. So you see that in that, and you also see the U-curve inversion happening. That is also a precursor to a recession. So I do think that a recession is likely, but I think a recession is actually an indication to buy. I came across a study, and statistically it showed, right, if the US officially declared it's a recession, 1 year later, the stock market return is more than 90%. So it is actually an indicator to buy. Yeah. So the longer they don't declare, I don't know where the bottom is. The moment they declare, maybe that's the bottom.
Anyway, we are already in a technical recession.
Technically.
Yeah. So I feel that the bottom may come when the Fed says that they will slow down raising interest rate.
Okay.
Which actually have happened recently. How are you actually investing in this current market?
I still have cash, and I'm waiting to deploy.
Is it a lot of cash or a little bit left?
The 20-30% cash.
Okay.
Yeah. But I guess that's the problem, right? When you have some cash to deploy, the issue is that you don't want to buy and then see it go down further. Right? That's what most people are fearful of right now. But as we have discussed, it's very hard to know where the bottom is. Okay? And you don't need to buy at the right bottom to make money. Okay. So from an investor perspective, I think at some point you have to deploy, and I would do a more bottom-up approach. If a stock that reaches the valuation that I think has enough buffer, I will go in. Yeah.
Okay.
Yeah. So it's not that I don't buy US stock. I actually want to buy US stock. I'm still waiting for those few that goes to that level. If they reach a right valuation, I'll just buy and don't look at it.
But how come if that's the case, right? How come you're not buying more into like Alibaba? The valuation is super good.
Okay,
already.
so I have another rule, a portfolio rule, right? No stock should be more than 10% of my allocation. Yeah, that is to protect me, right? Just in case I got the biggest position wrong. Right? So I have this rule. So which means if I so confident about many stocks, maximum I'll have is 10. Right?
Okay.
Because 10% each. But rarely the case.
So what do you think about my 80% Tesla portfolio?
I guess it's you have that confidence, you have that.
I don't have. I have.
Exactly. If you don't have, you won't put 80%, right? Yeah. So I think to each his own. Right?
Okay.
Just that for me, I don't want to get ahead of myself. It's just a safety feature in my portfolio.
So you feel that like for beginners, a 10% kind of allocation is
Might
actually?
even be lower.
Oh,
Maybe
even be lower.
5%. Yeah.
Okay, okay.
I would think that a diversified portfolio should have at least 15, 20 stocks.
15.
20 stocks.
Might as well get an index fund or ETF.
No lah,
already, right?
index is more than that. S&P 500 is 500. Yeah.
With 15 is hard to keep track, right?
Not really. Actually, the thing is that okay, different views again now. So my contrarian view is this: the fewer stocks you have, the more work you need to do. The more stocks you have, the less work you need to do. Because one stock is not going to make a difference. That's why you buy index fund is well than 500.
Yeah.
One stock die also never mind one.
Yeah.
Correct. But if you have 5 stock, one stock die is very painful. So
Okay.
which means that you have to do a lot more work to ensure that you're right. So that is my view lah.
Makes sense, makes sense.
Yeah.
What's your DCA strategy? Do you like buy every month or do you look at indicators to buy?
More ad hoc. Like what I mentioned, it's more valuation based.
Okay.
For long-term holdings lah.
Okay.
Yeah, I do some trading using the momentum strategy.
Okay.
Those you use certain timing indicators. Yeah. So I would say it is not a very regular thing, but I would see the merits and the beauty in it because it creates a system, a routine, a culture of or a habit of investing. For most people, I think a regular routine investment makes more sense.
Okay,
Every
okay,
month
okay.
you just stock in, put in the stock market or some funds. I think that is easier for most people.
Okay, you mentioned about like you have like 30% cash left, right?
Yeah.
How will you deploy that 30%?
If you know what's my wish, right? My wish is that one shot, the stock market just tank 10%, 20%. Then I will just deploy everything, settles the job, or just go and buy. But-
Serious? If it drops just by
Yeah,
10%, you will
yeah,
all in.
Yeah. Index level.
Okay,
level.
okay.
But the problem is not here, not there.
Mm-hmm.
Right? Not here, not there. You have a lot of dead cat bouncers along the
Right,
way.
right.
And valuation for some stocks actually is still not really that cheap. So I'm waiting for the valuation, as I said.
Okay.
Very stock dependent.
Okay, okay. Any tips on how to profit or hash in this current market?
The best hedge is cash. And a lot of people are putting their money in treasury bills, bonds, fixed D, right? So those can consider hedge in this environment where prices are going down all over the place. That's another school of thought, right? Just now we say that when it go down you should buy or dollar cost averaging down. But if you talk to the traders camp, it's a different story. The trader will tell you that no, now is not a time to buy. Don't catch a falling knife. Okay, they say that cheap can become cheaper, right?
Okay.
So you have a lot of all this counter argument.
Right.
Then they'll say, I don't understand all this long-term investor. Why would you want to buy when the market is going down? You should buy when the market is going up. Okay.
Yeah.
So there are some traders that are shorting. Okay, so that's another way, maybe not a hedge, but even to profit from a downtrending market. But I would suggest majority of people to do it. I do know some people use inverse ETF. Which is easy, so you don't need to deal with all the derivatives, CFD futures to short. But I would say that inverse ETF are not for long term.
Yeah, it will decay.
Yeah, the decay and depends on the nature of the underlying instruments. If they do a lot of rollover, there's a lot of rollover costs, so you won't get a complete short position as well. So I would say don't try to hedge here and there. Because the more you hedge, the worse it becomes.
Do you yourself hedge?
I don't hedge.
So you are
But I just hedge means I have some cash. If
Right.
it come down, I just buy.
But you are doing some short-term trading to make some profit, right?
Yes but it's not significant. Short-term trades are just
Maybe
for
it's significant for us.
fun. No it's not significant. Yeah.
Okay.
I do some shorting on D-Specs.
These
Okay.
bags.
Okay, we know specs, right? The
Specs, okay.
Special purpose acquisition companies. So a lot of them, they merge, right, at very overvalued valuation.
Right.
So artificially, the price is capped at $10.
Mm-mm.
So once they merge, right, the price collapses.
Yeah.
So I do very specific short
Okay.
like this. Yeah. But again, the volatility is very crazy. One day can go up 10%, one day can go down 10%. Without leverage.
Okay.
So I wouldn't suggest that. Yeah. And I think some other trades that are more obvious will be forex currency, because USD is strengthening, right? So against a lot of other country currencies who are not strengthening, like China, like Japan, these are pairs that one is continuing strengthen, the other two is going to weaken. So
Actually, do
have
you feel like this strengthening will keep going on?
as long as the interest rate, it's all connected, one.
Right. Why not just like buy USD now?
Yeah, possible. There are some
Right.
people who have USD. They have actually gain money just by holding USD since the start of the year without doing anything.
Okay.
Right? But this is more of accident rather than plan because
Yeah.
nobody knows like how much it will strengthen and things like that.
Ah, okay. No one
But
knows
but you can have trades like this even now. You still can have short-term trades like this because as long as China refuse to raise interest rate, right? They are cutting interest rate, and Japan also refuse to raise interest rate. That interest rate disparity is going to increase, right? As US interest rate goes up. So that's how that currency gap
Right,
gets
right.
widened.
Okay.
It's not easy to defend one. No government historically, no central bank historically can defend that kind of very huge macro
Okay.
changes.
Right. You want $10 million, right?
Yeah.
How would you deploy that $10 million?
I would think nothing would change that much. I will still focus a lot on the Lindy stocks I talk about, the dividend growers. Maybe it will be more diversified. Maybe I'll buy more stocks
Right.
to de-risk it. Currently, I don't hold a lot as well. Okay, of course, it depends on individual, right? To you, 15 is a lot. I hold about 20-ish, 20-ish now. So if that, with more that kind of capital, then I will probably buy more.
Right.
I will diversify more. But
So-
the strategy will still be more or less the same.
So all will still be in stocks,
Mostly
mostly.
because that's where I find comfort in.
Okay.
Property, yeah, it give me good price. So hard to find good price at this market currently. Yeah. So yeah, circle of competence.
Okay. I think we have reached the end. That was fast. So for the final question, right? How should investors invest in this current market?
My observation.
Okay.
So far, a lot of people are very scared. Okay. Very different from 2 years ago, where everybody is very, very bullish.
No, because that recovery was so fast, there was no time to be scared.
Really? But even after the recovery, say like near the end of 2020, still a lot of bullish people because the market has been rising very fast.
Yeah.
Right. So I in that time I was saying that I started to see a lot of beginners coming in, and I say that it's me. No, I say that it's normal, and because I also went in during a bull run. That was in 2007.
Okay.
Yeah, because I realized that bull run is where it attracts new investors in.
2007 was crash, right? The ground
Just
was
before the
okay.
crash.
Okay.
Near the end of 2007,
Right.
I think the crash started. So I was also like interested because if the stock market don't move, right, nobody's interested. Okay. So I would say that if you are still watching this video, it means that you are still interested in investing, and I think that is a good thing. There is a lot of fear, but I think that if you're a long-term investor, you have to deploy your money somewhere, right? And what better time to deploy in a crash during a bear market?
But slowly go in lah.
Yeah, slowly go in, right? Because we really don't know where the bottom is. If you want to wait for the rebound to come, it's also possible, but you have to be very fast, right? Because if the rebound comes and then you still wait, by the time you wait, next bull run come already.
Yeah.
So have to have courage when it comes to investing.
Exactly. I think with that being said, if you guys haven't checked out his blog and his YouTube yet, go check me out.
Yeah, thank you.
Yeah, he posts quite frequently, right?
Yeah, try to do more videos.
Please do. So with that being said, I think that's all for today. Like, share, and subscribe. Okay, see ya. Bye.
Bye.